Hi, everyone. Welcome to our live, very first Ask Me Anything broadcast. I am Sam. I'm here with Eric Green. I am with NATP. Eric is with one of our excellent new new partners, new official partners, I should say. We've been working together for quite a while, Eric. And so if you don't mind, just go ahead and introduce yourself for everyone.
Okay. I'm Eric Green. I am a partner with Green & Sklarz. We're a boutique tax firm in Connecticut, though we have an office in New York. And I'm the founder of Tax Rep Network, where we train and assist you in building your representation practice. And like the NATP, we're kind of your help desk.
So today, as I mentioned, we are doing the first of our Ask Me Anything broadcast. And so what we're here to do basically is answer some submitted questions. Well, not myself. I'm not a representation expert like you, Eric, but I am going to be reading you some of the questions that we have gotten. So let's just jump right in.
Okay.
The first question we got is, what can we do if a notice of deficiency has been issued, but the IRS has not processed the documentation that was sent and made a determination? This person also added, they've talked to several attorneys and none have had the time to file a petition in tax court.
Well, you're two different things going on here. So what happens? So notice of deficiency comes out that gives you 90 days to file the case in tax court. Otherwise, those adjustments will go final. Well, a couple things. One is you have to get the case filed in tax court. So the what happens frequently is the notice of deficiency comes out, especially for non-filers. The government will take third-party information, do it what they call a substitute for return, and issue the NOD, the notice of deficiency. Then what happens is taxpayers and practitioners will start emailing in, no, we disagree. Here are the documents. You may have noticed the IRS is still a little backed up with the mail from the shutdown. There's a good chance that no human being has looked at that. And so the first thing you should do is get the case filed in tax court. What's going to happen quickly, you file it in tax court because the government has 45 days to respond. And if it hasn't been to appeals, they will forward the case over to appeals, and then you can deal with an appeals officer and get it settled. The problem with waiting is after the 90 days comes and goes, that assessment goes final. And now you're left with trying to reopen it, which you can do usually. But the goal would be to get it filed. As far as an attorney not having time to do the petition, no offense, we can do a petition pretty quickly. Now, first of all, the taxpayer can do it themselves. There's a petition kit on the IRS website. They can fill. It's a fillable form. The 3 fillable forms: the petition, statement of taxpayer ID, and the request for place of trial. The hope is not to actually try the case, and you can file them. If you're having a real problem, Chris, you can contact us. We get this done all the time. We fill it in, send it to the taxpayer. They sign it, file it, pay the $60, and then you, as the CPA or EA, can handle the appeal and get it settled.
So is this something, you mentioned the IRS is pretty backed up. Is this a pretty common occurrence, would you say?
Oh, yeah.
Lately?
Oh, yes. Okay. Even before the shutdown, when you got that notice of deficiency, the idea of mailing in paperwork that somebody would open up, look at, agree, get signed off by a supervisor, and resolve before 90 days that would be pretty impressive. Today, it's like non-existent. So I think you assume you get the case filed. Once it gets to appeals, just settle it at appeals. We probably do 20 to 30 of these a year. I haven't tried a U.S. tax court case myself, maybe since 2007. Jeff Sklarz just won one last year. But the point is, we don't try a lot of cases. Usually you get them settled. So the goal is get into court. It'll get over to appeals, settle it.
Interesting. Okay. Second question from Steve. I have had an innocent spouse claim denied and an offer was denied. Does the IRS ever accept these? And what do we do now?
Okay. So, yes, they do accept them. If you get the response and you read the response and you you disagree with the IRS. You believe the offer is still perfectly, valid. The innocent spouse claim should have been seriously considered. You go to appeals. You always go to appeals. I'll give you an example. I generally get about 93% of my offers accepted. In 19 and 20 of the 27 filed, there are 2 that haven't been worked yet, but of the 25 that have been worked, 25 have been accepted. However, I want you to know 15 of them, so almost about 2/3, got done at appeals. So even I, who teach this stuff and I wrote a book on it and everything else, you end up going to appeals. So Steve, what I would do is make sure you file the appeal timely and take the case to appeals. This is not uncommon. In fact, we usually tell our clients right up front, we'll file it. Hopefully they accept it. If they don't, we're going to go to appeals. We'll get it done at appeals.
So it sounds like you're very comfortable with going to an appeal. It seems like a pretty common next step.
It is, and the appeals officers are better trained. I will tell you, which is very strange, for people whose job is to work at the centralized innocent spouse unit or the centralized offer and compromise unit, you'd be amazed at how little they know about offers and innocent spouse. Our offers get denied for all kinds of stupid reasons, and so we go to appeals, get it done at appeals.
Interesting.
Yeah, it's just part of the process.
Yeah, that's good to know, though. To just expect that extra step for sure. So next question, Lisa. My client showed me a notice of deficiency and collections notice. Are they stuck with the liability at this point?
So no, in fact, I think it was Chris who had the first question.
Yep.
All right.
Yep.
So this is kind of a follow-up.
Okay.
So remember, I told you, get the case filed in tax court, it'll get over to appeals. Well, okay, what do you do when the client, I think it's funny, the client says, I got this notice of deficiency. Oh, and by the way, I'm in collections, meaning it's already blown. You can challenge this. Now, there are 3 basic ways to challenge it. One would be, if the client can do it, they can pay and then seek a refund. They'd have to pay the whole thing and seek a refund. Most of my clients can't do that, though. So then the other options is audit reconsideration and a doubt as to liability offer. Audit reconsideration, there's an IRS publication on it. You basically submit the request for reconsideration. You're supposed to submit information the IRS has not seen yet. And eventually, and it can take up to a year and a half, they will work on it, review it, and then agree or disagree. The problem with it is, meanwhile, collections keeps going. So now you have to deal with collections. A doubt as to liability offer is an offer. So it's an offer based on, hey, we don't think we owe you this. So like audit reconsideration, you submit the offer with the backup. And the good news is it's an offer, so collection stops. The problem is, with a doubt as to liability offer, you have to make an offer to settle the balance. You cannot get a refund. So if the client's had refunds taken or has been levied, that money would be gone. So which one you want to choose really depends on your client's situation. But I think it was Lisa, you can challenge the liability even after the fact. It's not preferable because you're still at the sort of administrative whim of the IRS now. You don't have the leverage of tax court. But whether they can pay a refund, audit reconsideration, or doubt as to liability offer, you can usually get the IRS to reopen that and consider it.
Okay. Good information. Next question is from someone, Jane, who actually attended, I believe it was one of your webinars, the Innocent Spouse Program.
Okay, the NATP.
Yep. So you mentioned focusing on the financial page. Can you explain why? And maybe back up exactly what she was referring to.
Right. So, So what Jane is talking about, we have a whole catalog of programs in the NATP, education area on demand. We've done them live, and then they're recorded. You can get them on demand. One of which is on innocent spouse, which clearly Jane watched. What she's talking about, what you're talking about, is the form 8857, and that is the form that you request innocent spouse relief with. Uh, don't hold me to this. I think it's page 5 is a financial statement. I think it's 5 is a financial statement. So it looks just like on the 433 for collection, the page 4 with it has the income and it has all the expenses. What I mentioned in the program, economic hardship is one of the areas that the innocent spouse unit is supposed to consider. So whereas with an offer, people know, well, I have to go through the numbers. There's some strategies. Can I make them uncollectible? What I see with innocent spouse is it's almost an afterthought. People kind of like just slap this thing together and submit it without thought. What my point is, this is an opportunity. So one, make sure you fill it in correctly. And if the client is showing that they're negative, they don't have any free income, make sure you raise that this would cause a hardship. That is something they're supposed to be considering when they determine whether they're going to grant relief for innocent spouse. But the other thing is you do the same process you do with an offer. So all of those strategies that we talk about with an offer, expenses they're not spending, married filing joint versus separate, although at this point it'd be too late. You're obviously joint because of the innocent spouse. But those strategies, don't just think that those are only for offers. They also apply here. And so my point was, don't just, willy-nilly ignore that, right? What you want to try to do is bring that same sort of a investigatory strategic eye that you do for offers to the innocent spouse filing.
Interesting. This is good information. Next question from Carlos. So Eric, he's talking about his client, was deemed to be uncollectible with the IRS last month. Can I file an offer now, or do I need to wait until they come out of CNC status? And just maybe back up, what is CNC status?
So CNC is currently not collectible. Okay. And so the quick answer is you can file an offer at any time, right? And so I don't know what your client's situation was, but very commonly, we have to get clients, they have to be in compliance to do an offer. They don't have to be uncollectible. Which is there's a federal code statute 6343. The IRS can't levy somebody if they're in economic hardship. It doesn't matter if they're in compliance or not. So what do you do with these clients that come in the last half of the year? They haven't made estimated payments and they can't get caught up. Mm-hmm. We can't do an offer, but we need to do something with them. Well, if they're uncollectible, you can submit the financial to make them uncollectible. The goal being, Sam, for your as background, what you would do is try to make them uncollectible, get the IRS to back off. At the end of the year, hurry up, file the return so we can roll that year in and get them into compliance for next year, and then we can file an offer. So Carlos, to answer your question, you can file an offer at any time. So if you're in a payment plan and you decide you want to do an offer, you can do an offer. If you're uncollectible, you can file an offer, as long as they're an offer candidate. They're in compliance, you've done the RCP analysis, and it makes sense to do so.
Awesome. This was some really good information, Eric. Anything else you want to add? Yeah, they were really great questions. Anything else you want to add or mention at all?
Well, coming up, TaxCon. I'm going to be doing a whole program on liens and levies, so I'm going to plug TaxCon in my program. We're talking with the NATP, which always sponsors the New England IRS Rep Conference, which will be November 18th and 19th. But otherwise, hopefully we'll see everyone. Hopefully everyone will be on TaxCon, mm-hmm. And then hopefully next year we'll all be back together again.
Yes,
this is getting a little old. I gotta be honest with you.
Yeah, it's definitely different than being in person. Right. Yeah. So Eric, you mentioned TaxCon. We have TaxCon next week. Super excited for it. It's our second one. Essentially everything you love about in-person events, but online. So you can still interact with the instructors. You can still interact with other attendees. There's, still an expo. So exciting stuff. You can still register if you haven't yet. And like Eric said, he will be teaching some sessions on this topic. We did just have a question come in.
Sarah, I know Sarah. So how long does CNC status last? Great question. What happens, is the IRS will code them for uncollectible. The system then actually tracks their income based on returns. And so I've had it last until the 10-year statute has run out. All right. And I'll give you an example. So I had a woman who was retired, disabled, think about 70. We made her uncollectible. We got all the returns in, made her uncollectible. She died 12 or 13 years later. They called us to do probate. They never heard from the government again. She was the uncollectible, and being disabled, her income never crossed whatever threshold the IRS was tracking. So my understanding is the IRS has coded it. They'll track returns. So if a return suddenly comes in and the income crosses, I think this is what I think happens when they input everything from the 433 to make them uncollectible. They can roughly guess at what point income-wise that person would be collectible based on their income. I think they track that. So if a return comes in above that threshold, it would trigger a review. So that's when the notices will come out. But otherwise, I have someone that stayed for almost just about 10 years in uncollectible status. So I think as long as they keep filing returns and those returns show that they're probably not collectible, they can stay there.
There we go. Cool. Well,
another good question.
Thanks for all of the questions, everyone. We really love hearing from you. Kind of helps us actually answer your questions of stuff you want to know rather than just us guessing what we think you want to know or should know. So please feel free to continue sending them in. You can email us at content@natptax.com with your questions. We're going to be doing this again next month, so just watch for the event, and you can submit your questions before then.
Another one.
Anything else? We have another one.
Yep. Yes, Sarah. Oh, thank you. All right. So Teresa, when a client requests audit reconsideration, we can request a hold on collections during the audit recon process. You can. What I have found is usually, what they usually do is they'll give you a 60-day hold. There's no chance it's getting worked in 60 days. So then you have to call back. Inevitably, we have been able to eventually get them to put like a permanent hold on. The other thing I'll tell you is that after 6 months of waiting, you can then go to the taxpayer advocate to make sure that and see, because they actually have a much better. They have an ability to get collections to put put the whole thing on a shelf while we're waiting. But otherwise, we found that they wanted us to call back every 60 days, which is fine, except for the fact that you have to calendar and call back every 60 days. The funny thing is, it used to be like you're sitting on hold for an hour, then you get the courtesy hang up, and it has made us nuts. There's now a service that allows us to call and get through in under like 30 seconds. And so we don't mind doing it as much now, but given the choice of the two, if we don't have to worry about a refund, I'd much prefer the doubt as to liability offer for that reason. File it, collection is on hold, and we can just sit on our hands and just wait till we hear from them.
Nice. It's always nice to do your part and then wait.
put the file over there, and then I don't have to worry about it for maybe another year.
Exactly. Perfect.
And then what happens is we hear from them. I'm like, what's going on with that case? And we'll figure out what we were doing again. Yeah.
Well, thanks so much for joining me, Erica. It's been really fun to talk to you. Very informative. And like I said, we're going to be doing this again next month. So everyone, if you're interested, watch. For more information, you can always email us at content@natptax.com with your questions, or send us a message on any of our social platforms. Get in touch with us that way. Thanks again, Eric, and we will see you all next time. Bye, everyone.
Great.